Hi everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at some of the stocks that were in play today. So first up is Rite Aid, ticker symbol RAD. So congrats everyone that caught the alert yesterday in the chat before it closed. Yeah, the puts were up, or the calls were up nicely today. So congrats everyone. Big move. It closed above the 50-day simple moving average yesterday at 181. That is the green line, so that was signaling more upside potential. And then the next key level to break was the 100-day simple moving average at 210, and also the bottom of the gap. There's a gap between low of day on this candle and high of day on this candle, and so the move today above the bottom of the gap in the 100-day simple moving average was very bullish. Okay, so it signals more upside potential. The share price ran up to the next target, which was the top of the gap, which is the bottom of this candle. And so notice the share price hit that level and pulled back. So that was a gap fill. So this space is filled now. So the gap filled, and then now it has to break above the top of the gap to head higher. So the 225 resistance level is the big level to break. If it can get above that level, that'll signal more upside potential. If it fails to break that level, it needs to hold this 100-day simple moving average. If the 210 bottom of the gap and 100-day simple moving average level breaks, it could pull back and fill this gap below. There's a gap between these two candles, and so a drop down here to about 192 or so would fill the gap. Okay, so yeah, very nice move for RAD. If you look here on the 15-minute chart, you can see today it had the gap up open. Here's the gap on the chart, and then it ended up forming a nice channel and then it hit resistance. And so once it hit resistance, it started trading sideways. You can see here it had a tight channel going, and then finally the middle Bollinger Band broke here at 3 o'clock, and so this was a signal that, like, okay, the chart's cooling down. It did hold the bottom of the channel, so that is good. If that level breaks, if it breaks below 212, you could see a drop down here to the 50 simple moving average down at 198. That's also the top of the gap, so that's the support level. It needs to hold this 212 level and then get back above the middle Bollinger Band, which is basically at 221, and then above 221, we were calling it the 225 resistance zone, but it looks like 224 is the key level that it needs to close above, and that would signal it's ready to break out higher. Okay, let's look at CERC. This is the chart we were looking at last night, and this is a chart that has annotations from a while back. We were using this to show the gap on the chart. As you can see here, it's back above 70 on RSI. The long upper wick on today's candle lowered Fasto, so Fasto is actually still below 50. Notice that plus DI here is hitting a previous top level, so this is a level where it's peaked at before. It's currently hitting the top of the channel of two channels. It broke above the longer channel, the high here in March and then the high in July. Okay, so that level was tested a couple of days ago. It failed to break, and then today there was finally a close above that level, so that was very bullish. You want to see that level turn into support, and then there was a ascending resistance line from this current uptrending channel, and so the share price closed right at the top of that level. So you want to see a break above that, and that'll signal that it's ready to head higher. And then we'll be talking about there's this 210 level, and then the bottom of the gap, which is up here at around 270. So it had the long upper wick. You notice that the upper wick on today's candle, it hit the bottom of the gap and it pulled back, and so it's really going to need to break that level. That could be that's always a tough resistance level to break, and so it looks like it's working its way up that direction. It's currently at the top of this channel, and so if it pulls back, you want to see that 300-day simple moving average hold. Okay, let's look at RKDA. Okay, yeah, this is trying to bounce down here. It's got a pretty ugly chart, very ugly chart. It broke middle Bollinger Band support back here in the end of September, and then it's just been riding middle Bollinger Bollinger Band resistance lower for multiple weeks now for the last 2 months. And so today there was a close above EMAs 4, 8, and 13. The close above EMA 13 and 24 at 24 was bullish. It broke above the dotted purple line, which is the middle Bollinger Band intraday. If it can close above that level, a possible new uptrend could begin, and you can maybe see a run up here to the upper Bollinger Band and the 50-day simple moving average. If it fails to close above the 25 level and the middle Bollinger Band, that'll signal it's a risk to hold. As you can see, unless you're short, this is a really risky stock to hold if candles are forming below that middle Bollinger Band. Notice there was a P-star flip. You've got the volume spike and MACD bull crosses. Okay, let's look at OHRP. Okay, so this stock pulled back yesterday and it filled the gap. Notice how it formed this inverted candle here, this black candle, after a big gap up open during an uptrend, and how that candle formed well above the upper Bollinger Band. It's always a good idea just to lock in gains and head to the sidelines when this pattern forms, unless you're short, because usually the candles work back into the bands, and that's exactly what happened here. Yesterday the candles worked their way back into the bands, and notice the gap filled. There was a gap between high of day on this candle and low of day on this candle, and so the gap fill was is a climax. When a gap fills to the downside, many times you get a technical bounce, and that is exactly what happened here. And so there was a bounce today, and then the close today above the closing price here on the candle from Monday is signaling more upside potential. This is signaling that the uptrend is intact. It is hitting a crucial resistance level, which is the closing price from back here in April, the 17th of April. So it needs to break above that level, and then it has the dollar land level and the March high close. And so that's always a big level to break. So it looks like it's headed towards dollar land. It wants to test that level. The candles did close. Today's candle did close above the upper Bollinger Band, so the candles might work back into the bands. If that happens, if EMA 4 at 83 holds, the chart will still be super strong. As long as the middle Bollinger Band's holding way down here at 69, notice you have the 50, 100, and 200-day simple moving averages lined up with the middle Bollinger Band. That's a huge support level down there at 70. As long as that's holding, the uptrend's intact. It just looks like it might want to break out higher. If it gets above $1, it could possibly run up there to the 300-day simple moving average. The big key is there's big volume behind the move. Look at the big volume. Okay, so WAC is heating up here, closed up 12%. It's above 50 on RSI now, and it's above 50 on FASTO. Notice it's pinched here on ADX, so you want to see that green line cross above the black and the red lines. And so today there was a close above the middle Bollinger Band, the dotted purple line. Notice the last time it closed above that level, back in the second week of November on the the 9th. It failed to hold that level, and the downtrend continued. So what we're looking for now is a bullish change in trend. You want to see another close above the middle Bollinger Band to signal that it's turning into support, and that's when a possible new uptrend could begin. And then right above this level, there are three key resistance levels. You have the 50, and 100-day simple moving averages here, basically at 49 and 51, and then you have the upper Bollinger Band lined up there with the same level as the 100-day simple moving average. So if there's a close above this 51 resistance zone, that would be very bullish, signaling more upside potential. If the share price runs up and hits that level and fails to break, that could signal a temporary top, and you might see the middle Bollinger Band retested. This is only a good setup if you're long, if the middle Bollinger Band holds. That's the stop loss level. If it closes below, you do not want to be holding. Look what happens when the middle Bollinger Band breaks. You could be on a multi-week downtrend if you hold. And so notice there was a P-star bull flip, and then you have the MACD bull cross on the 12, 26, and 9, and on the 8, 13, and 5. Okay, now let's look at VII. Okay, so this stock is in the bull zone here on RSI, and then you have FASTO here came up above the 20 oversold line, and then so that's signaling that the chart's starting to heat up. And so this has basically been in a sideways pattern. It's been trying to get a move going. It has an uptrend. It's been holding the middle Bollinger Band. It closed above the middle Bollinger Band back here in October, and the dotted purple line here has been holding. You know, there's all the moving averages are all lined up here. You have the 50-day simple moving average, the 100-day simple moving average. That the 50 is the gold or the green line, the 100 is the gold line. Then you have the middle Bollinger Band, which is also the 20-day simple moving average, and then the 200 and the 300-day simple moving averages. So they're all lined up right here. And the top one is currently the 300-day simple moving average, basically at 51. And so if the share price can close above 51, that's going to be very bullish. That's going to signal more upside potential. And then what you want to see is 59. That would be the next big level, this high close. And so if it gets above 51, you could get a run up to 59, which that's a nice percentage gains to that level. If it fails to break that 59 level, then it could pull back. You know, it has to get above the 300-day simple moving average to be a good play with this setup. If it fails to you know, break above that level, it just could signal more consolidation. And you can see that the share price has been consolidating for the last several weeks. As long as the 50-day simple moving average is holding, it is still in play. So you know, it's heating up. It's a thinly traded stock. Notice that on days when there isn't volume, the share price, you know, there's hardly any volume at all. So be careful with stocks like that. They can be easy to buy but tough to sell. And yeah, let's look at PTI. It closed up 32% today. It's at 75 on RSI. Fasto's at 79. Nice parabolic spike on plus DI. So there was a bullish close today above the 100-day simple moving average. That's at 230. So yeah, really nice move there. Let's see if it can, yeah, it closed also above the top of this channel. So that was a nice move there. It looks like it's trying to break out. You know, notice that this is a multi-month channel, and so the breakout above the top of it and above the 100-day simple moving average is signaling more upside potential. So if it can turn that level into support, you know, the close today was well above the 100-day simple moving average. If it worked its way back into the bands, you just want to see that level hold. As long as it holds, then it could potentially work its way up here to this 200-day simple moving average at 492. You know, there's going to be some resistance along the way, but notice how it was you know, it was a pretty straightforward drop down, and so there wasn't a lot of heavy trading in that level, or you know, between the drop from up here to down to this level where it channeled out. So yeah, so you could see a nice move if it can hold that 100-day simple moving average. Okay, let's look at CEI. Okay, so this stock is bouncing today off of the 50-day simple moving average. You can see down here it came down and it hit the green line here, currently at 17 cents. That is the key level to hold. It looks like it formed a bullish Harami reversal pattern, and so what we'd be looking for now is a bullish reversal confirmation. What you want to see is a close above the pink line. Notice how the candles have been riding below that level since they closed below back here. You know, they've been struggling to get above the pink line for multiple days, and so a close above 18, that would be a signal the chart's heating up. And the big level on this chart is going to be the 100-day simple moving average at 20. If it can get above that level in the middle Bollinger Band at 19, that could signal the possible start, you know, that you know, support's holding here, that this uptrend is intact, and then you could look at a potential run back up to 25, maybe up to this high close at just about at 28, and then you have the 200-day simple moving average at 30. Now, if the 50-day simple moving average fails to hold, the share price could pull back, and the next big support level is going to be down here at 14, the lower Bollinger Band, and you can see that was the low down here. So yeah, so keep an eye on CEI. We'll see if it can follow through after bouncing. And then one last one to leave you with is DRNG. Yeah, this stock has had a nice, you know, nice move above the middle Bollinger Band. We had been watching this thing for a while. We watched this whole drop happen. You know, we watched it break the middle Bollinger Band, and we kept looking at it, and it was just dropping every day and just not getting above the pink line. Look how long it just could not, you know, failed to get above the pink line. It finally got above, and it looked like it was going to do something, but then once again it got back below. It failed to get above the green line, and it just stayed sideways down here, consolidating at 5 cents for quite some time, and then finally here, you know, last week it closed above the middle Bollinger Band. In the last few days, it's been able to hold above that level. It's actually been riding EMA 4 at 7 cents higher. As long as EMA 4 is holding, the chart's super strong. If it closes below that, it needs to hold the middle Bollinger Band at 6 cents. If it drops below 6 cents, then it's no longer in play. As you can see, it has, it could drop for quite some time. But this looks like it could be heating back up. Notice volume has come back into the trade, and if support holds here, then it could make a run back up here to the 50-day simple moving average at 15. So keep an eye on DRNG. All right, thank you very much for viewing this video. Please check us out in our new chat. We, it's a really good mobile app. Alerts are put out all through the day, and I know it'll be a very useful tool for you in the future. So I'll put the link below the video on YouTube. Okay, thank you very much. Have a great day.